Hello, everyone. Good afternoon. Good afternoon. How are we doing? If I could get a quick 555, let me know the audio is coming through and that you guys are seeing the E-mini S&P. Five five five. Thank you, Christopher. Leo, thank you. Ghost FX, thank you. German, thank you. Joe, appreciate it. Loud and clear. Awesome. All right, let's go ahead and clean this chart up a little bit. We'll go ahead and get to work for the PM session. So we'll go up to the daily chart, go ahead and take you guys through everything I'm looking at here, and we'll do that on a naked chart so we can see everything clearly. But how are we doing today? Hope everyone's good. Appreciate you guys joining us. Hello, Anita. Adolfo, hello, hello. TrixONE, guys, show some love to Dylan with lots of likes for the efforts and dedication. Thank you very much. Hey, Carl, doing good, my man. Doing good. Hope you're well also. Olawale, good to see you there, my man. Daniel, first one in here. Glad to have you. Joe, hello, hello. Awesome. All right, guys, so let's go ahead and get to work. I'm expecting a cleaner PM session than we saw in the morning. Yeah, there was a little bit of movement this morning, but not the cleanest delivery. So I was flat this morning. I did not take any executions. I missed the initial entry going short for the morning session. I was working with my associates, working with my colleagues, and teaching them some things. And in the middle of that, the entry occurred while I was in instructor mode. So I missed the trade, missed the setup. But again, no worries, because as we know, our setups are always programmed. They're scheduled into the marketplace. So even I miss moves too. I'm not in every single price swing. So that should put you guys in a comfortable space, understanding that you don't have to be in every move either. So we'll go ahead and sort out some price action here for the PM session, see what we have, share my expectations, and hopefully we'll get some nice setups this afternoon. So we'll see what we got. So let's start from the daily chart here. Let me go ahead and make sure there's 2 people I want in here. So let me let you know we got the stream started. For some reason, it's not able to let me text you. Hey, Sal, if you're in the chat, bro, if you could just let me know you're in here. I'm trying to reach out to you, but will I open up mentorship? Yes, I will be opening up private trading. Yes, I will be doing that. All right, for some reason. All right, one moment, guys. Sorry, I'm trying to get something straightened out here. Okay. All right. Sent that message. Watching live from India. It's midnight here. Just waiting for your stream. Awesome, Ash. Thanks for joining us from India. How can we join mentorship? All those details will be on the website soon. So I appreciate your guys' enthusiasm for wanting to learn this skill set and carve out your financial freedom. And I'm looking forward to getting you guys there. So with that, let me make sure everyone's in here. Brown Strat King, what's the significance of the settlement price the next day? Settlement is significant. It's something I use in my analysis, but it's not just a straight shot like I can give you a 1 cent answer. There's several things it tells me. It communicates to me how we trade there, when we trade there, if at all. All those are significant points. So that's something that, again, will just take experience to get used to, but you do want to have that price on your charts for sure. Yo, 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 Dylan, love from India. Awesome. Glad you're here. Will you also do signals? Absolutely. Of course, that's originally what I planned on doing, but just because of popular demand, lots of interest in me being a mentor, trainer, educator, That's the only reason I decided to open up private training, and it's probably the only year I'm going to be doing it, because after that, it's a lot. It's a lot to manage different personalities, teaching, doing all that. So I prefer trading. Trading's a lot less stressful, a lot less to manage. It's just me. And Signals is awesome as well, because again, like I said, there's none of that pressure of having to educate, because, you know, again, one of the hard things in the education space is dealing with different personalities, and many that aren't equipped to do this. So, but we're going to be doing it, and Signals again is where what I plan to do anyway. So Signals going into next year will absolutely be something that we're going to be offering. So I'm excited for that as well. Excited to get you guys on board so you guys can take advantage of these opportunities. So with that, we're going to go and start the analysis here. Going to go ahead and start from the daily chart, just break it down, what I'm looking at, some things I'm considering. And again, want to do it on a naked chart, because I have a lot of things drawn on here, if you guys can see, that can get to be really busy really quick, and that's more for me in the lower time frames. So just so I can have those reference points. So we'll take that off, and again, we'll get right to it here on the daily chart. So what I'm seeing is we're bullish. Again, I took our attention on Sunday to these equal highs up here. Why this high specifically? It's the previous month's high. So that's going to be a significant high with a lot of liquidity. So from when we opened Monday, we see each day expanded higher, taking out the previous day's high. So we are getting bullish expansion. Not as much animation on this daily candle yet. That may change after the PM session. But again, our target is still up here. We're still looking for higher prices in E-mini S&P. So seeing how we opened, we traded lower through the morning session into lunch, into a discount, into this volume imbalance here, where this candle closed and this candle opens. We hit the low end of that, denoted by those two blue lines here. So we hit the low end of that, found support, and we're rallying higher. So another thing I want to take our attention to is those two blue lines. When we go into a lower time frames, you guys need to have all these levels in mind so that you're not getting lost in the price action. So understanding that these two blue lines here, and then these two blue lines here is denoting this candle's close and this candle's open. That's significant in my analysis and intraday price action. So for now, we're taking that off. Traded down into about the upper quadrant of this wick. So consequent encroachment would be here. Upper quadrant is here. So we hit that and we rallied higher. So I'm seeing support at these key discount levels, and we're starting to rally. So that's setting a bias for the PM session, which I am looking for higher prices. And then I'll share in the lower time frames what I'm expecting, what we'll be looking at, what would validate it, what would invalidate it, and what would be cause for me to take a trade or not take a trade. So we're going to go through all that today. And again, this live's directed at a few people that I'm working with in training right now. So you guys know what's up. But you guys get the privilege of hanging out here with us and seeing what it is I'm sharing and what we're looking at. Hello from Sweden. Nice to see you, brother. Thanks for joining us, HS. All right, so that's all we're seeing on the daily chart. So you're going to have these levels in mind. So let me go and put the drawings on here just so we know what's what. So again, looking at the two blue lines, that's the volume imbalance. So again, this candle's closed, this candle's open. That gap there, that's denoted by those two blue lines. The settlement price, that's not relevant on the daily chart, so I'm going to take that off. Then we have buy side liquidity, the previous day's high. So we swept that and then pulled back into the range. The purple shaded rectangle here, that's a volume imbalance. So right here, that was my target trading Tuesday. You guys notice all my executions yesterday that are in the chat. What was I doing? I was buying the market. I went long in the morning, went long in the PM session, and absolutely slapped the S&P around silly yesterday with the bias I shared with you guys, which was higher prices into this inefficiency. I didn't highlight this inefficiency to you guys. I took our attention up here just to give you guys a better target because there's not that much range there. But still, if we're looking higher, the bias pays. So you got to know what you're looking for and why you're looking for it. So I believe that's on the daily charts. Let's work our way through the time frames. And again, I'm going to go ahead and take the, there's one other thing actually I want to share on the daily chart. So looking at this daily fair value gap here, I just want to give a reasoning for what all these levels are. I don't want you guys to think I'm hiding anything from you. So volume imbalance, fair value gap here from this inefficiency higher, extending that through. Look at how that was beautiful support. And yesterday it was our low of day. So we're still seeing that bullish order flow on the daily chart and still looking for higher prices just to this high short term. So that's what those levels are. So as we go through our time frames here, go ahead and take this off the hourly chart. Early in the morning, we opened, traded higher above previous day's high, which is significant. Traded above it, rejected, and then market traded to a short-term discount. So what I was looking at this afternoon, again, the bias was looking for lower prices after we took out previous day's high and rejected it. So that gave a nice short setup into the sell side here and here, these equal lows, and then into a discount market. So what I liked was about this PM session was how we traded lower into a discount. So from this high to this low, our dealing range, we traded into a discount, more specifically hitting that bullish order block perfectly, hitting that high, smart money accumulation there. And then we see a nice rejection higher from discount valuation. So if we're bullish, when market trades down into a discount, we want to see aggressive expansion higher. So again, that's just a signature. That's the market maker's MO. That's how they operate. So market was taken lower into a bullish order block below these sell stops here and here. So again, you got to understand how these entities operate. If they're going to take it up here to these premium levels, again, not saying it's a guarantee, just what I'm expecting. So this is the thought process. This is the dialogue I have with myself as I'm looking at price action. So we haven't even got to 2 o'clock yet. So no rush, no setups for me, not missing anything. So just giving you guys the dialogue and setting the context for what I'm looking for and why. So again, seeing that we trade down into a discount, we hit that bullish order block. So look at it from a market maker perspective. If you're going to reprice up here into a premium, it better be worth your while. So what are you going to do? You're going to drop it below these lows here and here. Retail Rick has his stop loss jammed up above the double bottom as soon as it rallies here, and then they've been taken out. From what I'm seeing, smart money would assume that position in a deep discount, and then they're going to send it higher. So that's personally what I'm favoring and what it is that I'm looking for moving forward based off the dynamics top down. Thank you. So hourly chart. So that's all I had. Let me go ahead and touch on another point here. That would be like an invalidation or a validation. So if we're going to go higher here, many of you guys are probably thinking there's a bearish breaker. But remember, patterns are second to narrative. Oh, look, I read your mind, Jay. Read your mind, brother. Breaker and fair value gap. Awesome. So that's what I wanted to bring up. See, I already know what you guys are thinking because I had all these same questions as well. But if we're going to reprice higher, the daily and the weekly chart is going to be much more significant than your hourly patterns. So again, whenever I'm training someone, I beat into everybody's head that we are not here trading patterns. You have to understand liquidity and where that market's going based on a higher time frame. Because if you just try to trade patterns for pattern's sake, and we're repricing up here, and you sell short thinking that's a bearish breaker, you're going to get crushed because you're just in here like retail, looking for a pattern. Oh, there's a fair value gap and a breaker. It's not the pattern itself. It's understanding what the market should do, why it should do it, and then your patterns become effective, but not the other way around. And exactly getting into that point, that brings me into my validation or invalidation. So if we start to reject from this breaker and fair value gap, then that would pump the brakes on me looking for higher prices. So what would constitute me not taking any trade long at all would be seeing us reject in this fair value gap and inside this breaker. Rejecting lower would not be a bullish signature. I would need to see this candle here close above this fair value gap. So let me go ahead and share that here. So I want to see this candle in about 10 seconds. I want to see it close above this inefficiency. Because if we do that, that indicates to me we're bullish. And then I want to see us trade to and through the bearish breaker. So I'm not looking at this as trading into the breaker, sell off. I'm looking at it as we traded down into a discount, accumulated at the bullish order block, and now they're going to reprice it to the levels we're looking for. And then looking at this 2 o'clock candle. If it is going to be bullish, I would want to see some type of Judas swing or manipulation lower first before trading higher. So I'd want to see this act as inversion if we're going to trade higher. So not 2022 model, sell short this fair value gap for the equal lows. We're looking for higher prices. But again, I'm welcoming being wrong, being incorrect, and having to adjust. But from everything I'm seeing top down, this market is indicating to me that it's likely to go higher. So shared what would be an invalidation level. So I covered that as well. All right, so I shared what I'm looking for here in the PM session. So again, we have that breaker on the hourly chart, which I do not want to see be resistance. So again, how do you know when this is going to be a breaker sell short? Experience, working with somebody who knows what they're talking about, that can qualify all these things to you real time, That's how you learn it. Again, you're not going to watch ICT Quick Content Month 4, watch a 15-minute video on breakers, and now you can trade it. There's a lot of things you have to understand. Many people probably would have sold short this fair value gap thinking it was 2022 model to go short. But you have to understand narrative. Where's that market going on the higher time frame? So would it make sense for this to be a short? Probably not. All right, let's go ahead and get down to the business. We're getting into crunch time now, 2 o'clock. So if we're going to be bullish, this up close candle here, bullish order block should not act as resistance. We should get to and through it, because if we get through this up close candle, just like this fair value gap here, how we closed above it, I'm not looking at this as trading up into this 15-minute fair value gap, go short. I'm looking at it as we're going higher. We trade it down to a discount and go higher. So that's what separates me from all your other smart money concept gurus that are just here trading patterns. You have to understand narrative. If not, you're going to get smoked on all your patterns. You have to know what you're looking for. And again, you only get to that point working with somebody, again, who knows what they're talking about and can show this ahead of time. So what I like to see here is how this down close candle, which would traditionally be looked at as a bearish order block. But why isn't this a bearish order block? Because the narrative is bullish. We're looking for higher prices. So we're not going to look at this as bearish order block, trade into it, sell short. So huge lesson there, huge paradigm shift for many of you guys that are new to these concepts. Again, it's not just the patterns you're looking for. You got to know what you're looking for. And then we're seeing again that bullish order flow. So seeing this daily volume imbalance, we traded into it in the lunch hour. Displaced higher, fair value gap, bullish order block, hit that, rally. Down close candle, bullish order block with a fair value gap. So this is a high probability order block. We hit that, we rally. Again, bearish order block, qualified to you guys real time why this would not be a short. I Ben Kingsley, this is gold. Yeah, thank you. Appreciate, glad someone recognizes the value in this. I appreciate it. So again, this is why we don't look for this as a short. I'm looking at it as we're going to get above it, and if anything, we'll use it as support, like a mitigation block. So every PD array has an inversion aspect to it, depending on the state of delivery. So Jay, member question, you were looking at the bearish breaker and fair value gap, so qualified why we wouldn't use that real time. So look, your membership already paid for itself, saving you the stop out, brother. Papa Vlad, what's going on, brother? Glad to have you, my man. So 5-minute chart, that's what we're looking at. Again, this fair value gap here, this would have been a nice silver bullet long for the 5-minute traders, for those of you guys that trade 5-minute charts. And we'll hit it about 5 minutes before. But again, that's why I don't trade just a silver bullet window. I trade 15 minutes before and after, because there's macros that I still want to be able to get action in on. So again, hitting that fair value gap, rallying. So order flow is bullish. And then just to share it once more, again, if you're just a pattern trader, you would have got smoked right there. So look, your investment and time in here already paid for itself. How's that, huh? I'm having a good time, having a good time. Thanks, Joe. Glad it's helpful to you, brother. All right, so let's go ahead and get into this here. So seeing that bullish order flow, let's go ahead and pull these other time frames, because you can't just look at your 1-minute charts. You have to understand what the 15 minutes doing, what the 5 minutes doing, and then obviously what the other time frames are doing as well. So any of these inefficiencies here, you can go long there for a silver bullet. Again, not financial advice, not a financial advisor. This is just education, in my opinion. So you do have to take responsibility for all your decisions. Unfortunately, you can't take a stop loss and blame it on me. So if you're doing anything, you took that risk, you put yourself in that trade. I'm just sharing my opinion here and what I'm doing. So target, I like this high here. So if we continue getting animation on the upside, this high here. So I'm looking for a new high of day. That's personally what I'm favoring. And I'd like for it to trade into the fair value gap. Give me a nice long entry to ride this thing higher. So that's what I'm going to be looking at. So as much as I wish I could take all your guys' questions right now, when I'm locked in, I'm zoned into the charts, I'm not being as attentive to the questions. But maybe when I'm done here, if we get a few extra minutes, I'll definitely take the member questions for sure. But maybe I'll look to answer some of your guys' questions that are just hanging out here with the free loading. So let me go ahead and pull up what I need. So you guys know what we're looking for. Set the stage. Gave you guys the context, the narrative, the why, and where we're going. So we should be ready to rock and roll. Papa Vlad, I'm doing good. I'm looking for the silver bullet. Awesome, brother. Christopher takes notes. Take notes, guys. This is good. Awesome. Glad someone sees the value here. Denisha, patience was key today. Thanks for joining us with the stream. Absolutely. Hey, Sal, glad to have you, brother. Definitely. You have to be patient, and one of the things when I was training my colleagues and associates this morning was looking for shorts. We were looking for it, but it didn't give a high probability entry that I liked. So there was no trade this morning. So we sat through the entire morning session and put on no position. And that's what trading looks like. Trading is just another day in the office. If you're here hopped up on goofballs, you can't wait to get into that next trade. You're excited. You're overly emotional on every trade. You're doing everything you shouldn't be doing. Everything the wrong way. The wrong mindset, the wrong approach. This should be absolutely boring. For example, and you guys know people that go in that punch a clock every day. Are they ecstatic about going and punching the clock? Are they just bouncing off the walls because they made it at another day of work? Absolutely not. It's just another day at the office. And that's what your trading should look like. It shouldn't be hopped up on goofballs, on excitement. Again, it's just another day in the office. And that's what your trading should look like. And that's where many of you guys go wrong in terms of the mindset. So any fair value gap here, I want to see a bit of a retracement to give me a entry in one of these fair value gaps. That's what I'll be looking for. But if this thing starts to run, one of the reasons I always get asked, how do you fear, or how do you not fear missing moves? Because I know that if I really want to get into a trade, I could have been already here on the 15-second chart, and I already could have got that as an entry. So I'm never fearing missing moves. I'm never fearing not being a part of a setup, because there's always new entries. And let's say I don't put any trade on this afternoon and I don't do anything. There's more setups tomorrow. There's more setups the next day. There's more setups next week. So again, that's that professional mindset that I coach and I cultivate in every single person that I work with. So these volume imbalances here when we opened, if I was on this time frame, that could have been a long right there. This volume imbalance here, trading into that could have been a long entry. This one there. So I'm going to go ahead and look to position myself. Looking at dollar. Lisa Song, new to you, so excited to learn more. Awesome. I'm excited to get to work. I'm excited to get to work for sure. My entire way of trading changed once I found you and got funded with Top Step after learning from your YouTube sessions. Thanks again. Wow, man, that's awesome. Really appreciate you sharing that with me. And I'm really glad to have played a small role in your success. That's awesome. Fly Fisher, I'm excited for your mentorship. Do you have a time frame to go live yet? Yes, website will be out. Waiting on some documents and paperwork from our legal team. But once we get all that straightened out, we should be ready to roll. So looking at sometime maybe late this week, probably into next week, depending on a few things. But we'll be monitoring all those things. Papa Vlad on the 5-minute breaker. Yeah, so we just had a new 5-minute candle open here for the E-mini S&P. So what I'd be interested to see is if we punch into that 5-minute fair value gap, I would like to see that. But because we're inside that daily volume imbalance, we could just rally from here. So that volume imbalance here, I like that as a demo theoretical entry. Again, you have to take responsibility for everything you're doing, and we should not get below this low here. So this would be like an invalidation level for that trade. Yep, I see what you're seeing, Papa Vlad. We're seeing the same thing there, brother. Yes, sir. Yep, Denisha, patience was absolutely key. Glad you were able to join us today for sure. I've been Kingsley. It was a very significant role. I owe you big time. I was just constantly blowing accounts, but I don't anymore because I realized higher time frame bias is the god. Definitely, you have to understand that higher time frame, understand what it's telling you, because then that's what makes your lower time frames high probability. So again, there's a lot of things you got to weigh out, consider, and like I said, it's not easy. Like I said, if this was easy, why wouldn't everyone just play the Forex lottery from their laptop and quit their job, right? But unfortunately, it doesn't work like that. So, all right, so we're punching into that 5-minute fair value gap now. Going to be monitoring how we trade there. I would want to see the market trade higher from this level here now. So it's that 5-minute inefficiency right there. I would want to see the market find support and rally from here if we're going to be bullish. So like for the 5-minute traders, for traders that trade lower time frame, that would be the valid entry right there. And again, going back to that 1-hour candle, for you guys that have been working with me for a while, and especially privately, you guys know what we do with this. So we see open manipulation. As this thing was a down close black candle, I'm already telling you what we're bullish. That's manipulation. And now what do we see? Candle expansion higher. All real time. No charge. All right, so back to that 1-minute chart. So 5-minute fair value gap. Let me go extend that through. So I'd want to see the market find support in here. Prefer to see some of this left open. That would be ideal. But we should not get below these 2 down close candles here, bullish order block. Looking at the old NQ. NQ's looking strong. See, I'd want to see lift in E-mini S&P from these levels here. And then I'm monitoring dollar on my other charts as well. So dollar's just consolidating, which is fine. We don't need dollar to be doing a whole lot. So let me go ahead and clean this chart up some. So this settlement here, that settlement low on that 5-minute chart, I would rather see the body stay above that and use that as some type of support. What I like to see is this buy side here and here. Notice how they left that intact. And then now they're retracing it. So every time the market retraces, what's building in above that high? Buy side liquidity. And then the fact that it's paired with another equal high here and here, what's that communicate to the retail trader? That we're seeing resistance, that the market is weak. So they're looking at this to call a top or a bottom in here. When what we're going to do is we're going to look to smoke those highs. Yeah, Flyfish, that's a good question. So I trade both the ES and the NASDAQ. Both of them are traded by me depending on different factors on which one I want to trade. But primarily I trade E-mini S&P. Unless the NASDAQ is just decisively bullish and I want to buy or something, then that in that case I will specifically focus on NASDAQ. But for the most part, E-mini S&P is more than enough for me. So, but I do always have NASDAQ open on another monitor as confirmation to what it is that I'm looking for. So that's nice there. I like how we hit that fair value gap. Again, I prefer to see the lower end left open. If we do that, then that would tell me we're bullish. And I do like to see, again, how we're closing now back above that settlement price. So now we should use this as support as a launch pad higher. So remember, guys, 5 handles a day. Keeps that 9 to 5 away. Always remember that. Wow, 160. We got a full house today. Again, I appreciate all you guys joining us. So now this down close candle in here, I would want to see that act as support. So I would want to see this down close candle as we're hitting that opening price right there. I would want to see us rally from there. So you see how we just open, touch that candle, and trade higher? Who's buying there? That smart money entity that's accumulating at that bullish order block. So I'd want to see the market start to rally from here. So the entry, again, discussed this volume imbalance was a nice one. And then as we're trading into this 5-minute fair value gap, that offers another pyramid opportunity to build the position in bigger. So I don't fear retracements. I welcome them. Why? Because it gives me a cheaper price to buy it. So that's what I'm looking at here. So I'd like to see how we're using this as support. Again, rallying higher. Gave you guys the narrative as to why this retracement was so nice, because we see equal highs here and here. And watch now, the algorithm's about to reprice into those highs and dust it. But again, you guys know it's all just buying and selling pressure, of course. So look, the buyers are going to take control of the market and reprice it higher. Watch this. IBDA 20-day high in the crosshairs. Absolutely. Covered all that on Sunday, my man. Yes, sir. Hey, Jonathan Lee. Thanks for joining. Glad you're able to join us. I love how you annotate your charts. Clear and precise. Thank you. Thank you. So tapping back into that down close candle, hitting that opening price, and I would want to see the market rally from there. If we get through it, the only reason I don't want to see us get through it is because then we may have to come back into that fair value gap and then do a deeper retracement and then potentially go higher, and I just prefer not to see that. Again, I like trading low resistance liquidity runs, which is just fast runs higher. I don't like to see deep retracements, deep consolidations. I don't prefer to trade those market conditions. I like to trade when the market is moving dynamically in my favor. Prime example, the trades I took yesterday, going long into the volume imbalance in here, seeing how just nice run higher, not a lot of consolidation, not a lot of retracement. This is the price action I like to trade here. So that's why I'm very demanding of price action. I like to see very specific things. And if I don't see it, if I see like we start to violate this bullish order block, then again, it wouldn't change my perspective because it's only a 1-minute chart. So it's not going to be the end of the world. Okay, you know, let's throw shorts out the window and look to, or longs out the window and look to go short. But what it communicates to me is that the market's not delivering as I'd want it to see, which again tells me that it's probably not going to be a clean delivery. So if I was just trading by myself, I would just shut everything down and go do something else with my time. But because I'm here with you guys, we'll go ahead and sit through it regardless. So hitting that settlement price once more here. So I would want to definitely see the market rally from there. So what I don't like to see on the 15-minute is how it's starting to stagnate around here. I need to see this candle start to run quickly. Because if we start to run quickly, then that's going to tell me that we're bullish, I'm on side, and that I can hold for a new high a day, or at least a rejection block in here. But this stagnating here, that's problematic. This market needs to start moving. And then if it doesn't, again, that communicates something else to me. That is probably not the best market condition, and I should save my mental capital, which is more important than your actual capital. Shut off the charts, go do something else. But again, order flow's bullish, still looking for these higher prices as we covered. So 5-minute chart, we took our attention down to this 5-minute fair value gap. We said it could retrace down to there, which it did. And then now it's accumulating more longs to do what? Go higher. So as long as we remain above this fair value gap, I will remain bullish in this session. But again, this market needs to start moving. This consolidation, stagnating here at this level is not something I prefer to see. Fly Fisher, what do you mean by settlement price? So the settlement price is on regular trading hours. where we closed the previous day at 410. That's the settlement price. And you see this, there's usually a gap there. That's influential in my analysis as well. And then I gave you guys a trade that I took on Monday using all this logic from that day, how I use it as a target, and shared it with a live execution. So plenty of resources to learn about that. But again, yeah, like I said, the market needs to move here. I don't like to see how it's stagnating. Again, I do like to see the signature of staying in the upper end, not even trading down the discount, which is good. But now we need to trade to and through these levels and then use it as support and continue going higher. I don't like to see, again, how it's just stagnating here and consolidating. I need a low. Hit that like button, everyone. Pretty please. Yes, absolutely. That helps us out here greatly. Denisha, click that like button. Show your support. Thank you very much, guys. It means a lot. All right, so we'll go back down to the 1 minute chart. So if I start seeing the 1 minute chart and it starts looking like this, it's not that clear to me. I'll go up to the 5 minute chart. But we'll go ahead and have the X-ray view on price action. So looking at this down close candle here, again, we qualified that as a bullish order block. So how low can it trade into a bullish order block? Mean threshold, which is, here, let me go ahead and fix that. So this 50%, it can go to there, but a body should not close below it. So I'm monitoring all these signatures. I want to see the market find support here. And then the bodies respect that 5 minute fair value gap. And then we do what? Push higher. Use that daily volume imbalance as support. And now I would want to see us rally from here. Like I said, this chop here is not something I prefer to see when I'm trading. I want to see the market run higher. So now using that volume imbalance low from that daily chart, again, you have to keep the levels in mind. That's why I start us from the daily and then walk us down. So if the entry was here, you could use that as a new entry. That could be another long, but I'm just using it to read order flow and see what the market is doing. Jesm, hey Dylan, good to see you, my man. Geraldine, great observation. Absolutely, repricing higher exactly from the mean threshold, or which is 50% of a body of a candle. Colin, will your mentorship offer advice on how to pass challenges? Not just pass them, brother. How to smoke them. How's that? So seeing this volume imbalance in here, just that touch of it, that could be a long entry right there. So if I was not in a position yet, if I wanted to go long and I hadn't accumulated it here in a better discount, on that touch there, I would use that as a long entry, or I would use it as a pyramid. But like I said, we need to start moving. I don't like this. If we just keep trading like this, then I'm just going to shut it down early because again, there's a lot better things to do with my time. Will your mentorship be going private or public one? Yeah, it's going to be private. It wouldn't be private mentorship if it was open to everybody. So that will be something you have to enroll into, and that's how that's going to work. So I already covered invalidation level all the while. I said this down close candle here, bullish order block, and intermediate term low. We should not get below that. So if the 5 minute was a theoretical entry, because remember again, not financial advice, your stop would be less than 5 handles there. So that's what I'm looking at. And another thing I do when I'm trading. That's funny. I got the Forex crew in here asking me to look at Forex. Maybe after I'm done with the with this session here, but I don't look at 2 markets at once. You guys can see how many analysis concepts are going through my mind each moment, and hundreds more that I'm not even saying because I'd just be like a motor mouth nonstop talking, telling you guys what I'm seeing if I was covering every single detail that I'm looking at to measure, read, order. And again, it's just something you pick up over time. But no, I will not look at other markets while I'm trading. ES is enough for a lifetime. ES is enough for a lifetime. motion, because I have settlement on when I'm looking at those volume imbalances. That could be why you have a disparity. But again, going back to that 15-minute chart, I told you guys the signatures I didn't like. I don't like to see how we're stagnating. Again, this market needs to run higher, or I will just abort the trade. And that's something that I do frequently. If I'm in a position and it just feels like I'm stuck in the mud, the market's not running for me, that either means I entered too early or I'm offside. So I'll use that feedback to just nix the trade either at break even or in a small profit, and again preserve that mental capital. Because if you're here stressing out over consolidation, market's not running for you, when that clean setup does present itself later in the session the next day, your mental capital is drained trying to arm wrestle a consolidation profile. That's something I used to do early on, but that's something I now know better, that if the market's not showing me the signatures I want to see, again, I'm going to go do something else with my time. Eslam, you trading live now or just looking into charts? I think for legal sake, I don't think I'm going to answer that. But you guys know what we're looking at. You guys know what we're looking at. I'll leave it at that. So I like to see the bodies here supported by that daily volume imbalance. One more touch of that settlement price, again, which is an algorithmic price point that it's pricing down into it. So if we are going to go higher, who's keying off those levels to buy? This smart money entity. Their algorithms are buying at all these key levels. The mean threshold of that bullish order block, that's a buy. Hitting that settlement, long. 5-minute fair value gap, that's a long. And those high frequency trading algorithms are constantly spitting out orders. Bam, bam, bam. Buying. Looking at the same things we're looking at here. So again, this thing needs to start moving here pretty soon. I want to see this 15-minute candle. A bullish close would be at least closing above consequent encroachment. So if we break this volume imbalance on that daily chart, if we break it in half and get a midpoint, I would want to see this candle close above consequent encroachment. That would then tell me we're bullish. Algorithmically, it would signal to me that I should continue looking for higher prices. So we're going to see how we close here in about a minute or so. Alex, saw you became a member. Support is greatly appreciated. Thanks, brother. All right, so that 15-minute candle close. Let's see what we're looking at. So right at that midpoint. So again, nothing decisive there. I like to see how we closed up. So it was a bullish candle, but again, I would have preferred to see us close above it. Again, that's not anything problematic. It doesn't tell me abort the trade or anything, but it's just not as bullish. Wow, very nasty price action. And I figured on the heels of Fed Chair Powell talking at what was it, 9:15 this morning, I think he was doing his jawboning. I was expecting there to be a cleaner afternoon because again, this morning, outside of this short setup here, which was just textbook 2022 model, 3 drives into previous day's high, bam, 10 o'clock, silver bullet, lower. Outside of that, all this was just crappy price actions. That's why I told you guys, because I missed this here, I was not electing to do anything with this price action here. This is of no interest to me. I don't like to trade that. Very boring. Takes forever. Deep retracements. Pyramiding is hard to do. It's just market conditions I don't prefer to trade in. And then you guys can see what I can do in just one or two trades in terms of numbers, and it's significant. You know, it's not Mickey Mouse money. So with that, if I'm pushing that type of size, am I going to want to trade consolidation? Probably not. I'm just going to trade cleaner market conditions. But again, this is not delivering what I'd want to see. I'd want to see this start delivering higher more aggressively. And I want to see it punch through these equal highs in this buy side here. Oh, there we go. All right, so again, from the 5-minute fair value gap, called it higher above here, told you guys why we were retracing, why it's going to want to build up more orders there, so then it can smoke these highs. And then again, remember I told you guys a wave of buying pressure is going to come in and wrestle the market higher. We're having too much fun here. Too much fun here. Right, I'm going to put it in my orders. Do you trade London or before market opens? I do not trade the London session. Just with my sleep schedule, with the way my life is organized, I do not have the luxury to trade the London session. But for stock indices, New York AM and PM is more than enough in my opinion. So I don't like to see that. So, I mean, we did trade up into our target here, that high, but I don't like to see how we're pulling off. I would want to see the market aggressively displace higher, and I do not like to see how we took out the high anemically and we're pulling back into the range. That is not conducive to seeing low resistance, liquidity run, and a nice run higher. Because what this tells me is I think they left this high intact. So I think they perfectly repriced into this high. Yeah, they did. Yeah, so they perfectly matched this high here, and now they're retracing again. This is why I don't prefer these types of conditions here. Again, like I said, I would have wanted to have seen the market aggressively displace through this swing high here and here. Because if we would have done that, then that would have communicated to me that we're likely going to see a much higher run. NQ trendline phantom. Yeah, that is something I'm paying attention to. Appreciate you pointing that out. Definitely. So trading deep into that fair value gap again, that was problematic seeing that high there. So invalidation level still above this down close candle here. And again, if it does get through that, then it's a small stop loss. So hitting that down close candle, clearing out these stops here. So I would need to see this market aggressively run higher now for me to feel comfortable in this position. And also looking at the 15-minute candle, trading lower into this down close bullish order block, which is fine. That doesn't change anything on a higher time frame, which is again why the stop has to encompass that. So again, it's not just let me jam it below the most recent swing low. There's a lot of things you have to understand and be able to qualify. So we hit this bullish order block in here. So I would want to see this market show a willingness to want to rally higher. So looking at this 5-minute fair value gap here, we traded back into it, hit the bullish order block. And if we are going to rally, we should do it from here. If not, then again, I'm comfortable taking a small loss and keeping it pushing forward. But again, that is something to note, how we are seeing a trend line phantom, which I do not want to see here. Seeing how there's that trend line that you can draw, because that tells me they're going to want to dig back into that. So that's why it's not a signature that I would want to see. So I would need to see this market again snap higher from here if we are. And if not, I'll take the small stop loss right below that low. Ugly price action today? Absolutely. Absolutely. So the fact that we matched that high and left those equal highs intact, that tells me we probably have unfinished business there. But here's the thing, on sloppier days, even if you have the drawn liquidity correct, even if you know where it's going to go and you can predict it and it eventually does, on those sloppy days, it's more likely to do what? Shake you out, have deep retracements that can stop you out, do a lot more than would be reasonable, which is why we direct our attention on higher probability days. And then again, looking at the market structure, looking at how it's not really running, this is not a clean, high probability day that I can say with confidence we're going to go higher or lower. So again, this is why I have to weigh things out. Again, just looking at the market structure, this is a very low leverage day where I'm not looking to push it a lot. I'm not looking to push a lot of contracts, take a lot of risk or heavy-handed bets today because of the signatures the algorithm's showing us. But again, touching into that bullish order block, hitting that, trading here, clearing out that short-term low, and then a nice rejection higher. Again, which is why we don't trade like the retail mindset where we just jam our stop below the most recent swing low, because the markets are designed to capitalize off that mindset. And if you are correct, if they are going to reprice it higher, they're going to want to take it below these lows first into the bullish order block and then take it higher. And the reason we did that was because we failed to displace higher. So what I would have wanted to have seen, as I was saying here and here, is this market needs to aggressively displace higher, because if it would have done that, then that would show me, okay, I'm onside, and that I can continue trusting higher prices. So let's go ahead and take off this 5-minute fair value gap. I'll just leave it on that time frame because there's things I want to draw your attention to. Okay. So this fair value gap here, I am not going to be looking at that as a short. So I want to see us close above it, use it as support, and rally higher. If we begin to see that the market is anemic in here, we start to trade up into it and start rejecting to the downside, then that would tell me that I should save the stop loss, not take a stop, and close out the position early. But seeing how we closed above it here, I'm now going to expect this to act as support and send us higher. Because this isn't a day where, again, I'm looking to take on a lot of risk or put on a lot of size, as we're trading back down into that bullish order block, that would be more accumulation. I would be buying more there. But because, again, the conditions, what we're seeing, looking at, if we just look at the entire day, is this very sloppy price action. Again, this isn't a condition where I'm going to look to risk a lot. So zooming in on the price action here, I like to see how we hit that as support. So when we were trading down here, I said, if we're going to be bullish, what are we going to do? We're going to close above, hit it, use it as support, rally higher. And again, there's rules. So that's why, again, we don't just jam a stop below the most recent swing low. You have to have it here. And then now those equal highs they left here and here, that buy side, what would retail see that as? Wow, that's a double top. Look, we hit it once, we dropped. Wow, we hit it once more and dropped. Wow, that's really neat. That's exactly what the book told me to do. And they're selling short right here on this drop. They're chasing that move lower. So again, not saying it can't drop, not saying it's guaranteed, but that's the dialogue I have in my mind. I understand that these markets are designed to take advantage of a certain mindset of trader that have been indoctrinated to see the incorrect logic. So I'm using that as a narrative. Again, not talking down to support and resistance traders. I've been there. I didn't come into the markets and, start walking on water right away. It took me a long time, a lot of losses, a lot of lessons to get to where I'm at now. So that's the internal dialogue I have in my mind as I'm trading. I'm looking for these specific signatures and I want to see them manifest, because then that's going to tell me where the market's going. So trading back down into this fair value gap. So we should stay above that. I would not want to see us get above or get below this inefficiency here, this inversion fair value gap here. So let me go ahead and label that. What's going on? So inversion fair value gap. So I'm going to see how this candle closes. If we do close below it, then that would indicate to me that I should save my stop loss and not let it get hit and just close the trade here. So that's how I would be looking at this price action here. And then last line in the sand would be the wick consequent encroachment. So if we start getting below that meaningfully, then I would save a stop loss that's here and not even let it touch that. So very difficult day, has causes me to use a lot of analysis concepts and things that I have to consider. So seeing how we got down now back below that, that would be reason for me to look at that as a red flag. So that's red flag number one. Now this market immediately has to show me some type of feedback that we're going higher. So looking at this this 5-minute fair value gap in here, again, that's why it's really important to monitor different time frames. Because if you're just looking at the 1-minute chart, it's really easy to get lost in all that excitement. But if you're looking at a 5-minute chart, all you're seeing this as is the market is just trading right back into this 5-minute fair value gap that we've been keying off of. So that's why it's always important to have these higher time frame references in mind, because it'll keep you from getting lost in the day-to-day fluctuations of the intraday charts. Not saying that they're not helpful, they're not useful, but it's really easy to get yourself offside or get spooked early based off these lower time frames when you need to be getting your narrative from the higher time frames. So as long as we remain above this wick consequent encroachment, I'll continue continue expecting higher prices. So waiting to see how this candle closes. And again, stop here would now be here because I wouldn't want to see us get below it. So reducing risk, not taking on more than I would want to in terms of a loss. And then days where we see consolidation from 2 to 3 o'clock, usually 3 to 4 will deliver a bit of a cleaner run. Yeah, very sloppy price action. So this fair value gap, extending that through, seeing how we hit that, but the bodies respect consequent encroachment, hit that once more, trade higher. So again, it can be really difficult navigating the intricacies of days like this. And again, that's why you need to do it for a long time with somebody who knows what they're doing, because I'm able to, again, share to you guys that, okay, let's not freak out on the 1-minute chart. Go to your 5-minute, see what's going on. Is everything still valid? Absolutely. This candle did what? Closed above that settlement and the fair value gap. So that tells me that the 1-minute chart, this is just a deep retracement and that we're in still consolidation profile. Daniel, will you live stream tomorrow? We'll see. We'll see where I'm at in my schedule and what I got on my calendar for tomorrow. But yeah, really boring price action. And again, this is not something that I would be terribly interested in trading if I was, again, just here by myself. I would have probably closed up shop by now. Or what I would do sometimes is just leave the order there. So leave the stop here, leave my entries up where they were here and here, and then just leave it. Leave my limit orders. If it gets hit, it gets hit, and I'll just come back and check it after 3 o'clock because, again, got stuff to do. I don't have time to watch, sit here and watch this abysmal price action. Islam consolidation is really boring. Definitely. Definitely. So here we have a fair value gap. I would want to see the market rally from here because we've already tagged that 5-minute fair value gap once, twice. Now for this third time here, I wouldn't want to see that. So yeah, we're going on about 30 minutes. So I would want to see us trade higher from this inefficiency. And looking at the 15-minute, we had a bullish close. So again, a lot of people can tend to get just really wowed with everything they're seeing on 1 minute charts, seconds charts, and think that's where the sauce is. But it's not. It's only beneficial or advantageous to you to use if you know what you're looking at top down. So because the 15-minute chart, again, we qualified this bullish order block, we trade into it, hit it, look at how we closed right above that settlement and trading higher, snapping higher after hitting that level. So on the 15-minute chart, is anything negating bullish order flow? No. Still looking at higher prices. So monitoring dollar currently, just in a range consolidating, so that's fine. $95.25. So here's what I would be doing now with my position. So because the stop loss was below here, this inefficiency, we traded down, up, and then we've left it. So now this becomes what? A balanced price range. So if I got my entry at the 5-minute fair value gap here, that's where I took my long entry as we were trading into that, as we covered real time. Going down to the 1 minute. Dang, it took that off. But point is, we should not get below this. So if the entry was at this level here at 95.25, my stop would now be rolled to here. So negative 2 1/4 handles. So 2 1/4 handle stop loss from that 5-minute fair value gap entry. So if that is to be a stop out, if 2 handle stop out is breaking the bank for you, you're definitely doing something wrong. So we should not get below that. So that's how I'm adjusting a stop real time, not jamming it up, suffocating it higher, but taking it below an invalidation point. Again, we shouldn't get back into that if we're going to go higher. So now instead of what would be about 5 handles of risk, 5 points, that is now reduced to to 2 1/4 handles, which is a very, very small stop loss. So there's logic as to how to reduce risk without, again, jamming the stop loss higher right away. There's a lot of different things you have to understand and consider. But again, wow, this is some really bad price action, which is why I haven't really been live streaming with you guys that much, is because the price action has been so bad. I mean, it really has been. So again, I don't prefer to sit here and watch this type of price action here. So this is the last chance for it to rally. Hitting the high of that balanced price range, it has to rally now, or I'm just going to close out manually, because again, I don't want to sit in this chop. And then let's say I take a small loss here. Again, just because the price action itself, I'd probably close up shop for the day. But I would be looking at maybe 3 to 4, and then expect a nice run in that last hour for the market on close macro. But we'll see. Weird call outs be on Telegram. Nah, Discord, my man. Alistair, bad price action is great learning. Please don't forget that. Many thanks. Absolutely. Definitely. That's where you learn the most. How do I think price action will be tomorrow? I'm not sure. I'd have to look at the economic calendar. So if it touches the low end of that, then I'm just going to go ahead and validate this trade. And and keep it moving, because we're probably going to go lower if we get below that. So that is reason for me to have no more interest in. Okay, so we hit that and now we're rallying, so we'll see. Still not closing out. Again, if we get below it on a wick, then that I would just close out manually. Christopher, valid trade, even if it's a loss, we don't care. The plan was correct. Yeah, man, exactly. That's exactly what trading is. You know, it's following a plan, having a protocol, and there you go. That closes out of the position. No more interest. So again, absolutely. So if you follow the plan, if you have rules, you know what you're looking for. Again, just like I told you guys, small stop loss here. I told you guys how I reduced the risk from 5 handles to 2 handles. So very small stop loss allows me to keep moving forward without being worried about losses. I know my system can take losers and I can still be profitable at the end of the week, at the end of the month. So that's why it's really important to have that professional mindset of not being, you know, hopped up on one trade, because if you are, again, you're way over leveraged and you're not in the right position to be trading. So we took a stop loss here. I closed out manually here. The stop was here, but again, I closed out manually because I don't want to sit in this type of price action. So small loss, again, told you guys how I mitigated it to 2 handles real time with logic. And then now what I'd be looking for is for the market to show me what it wants to do. It's not just, okay, I was long, I got stopped out on a retracement, now it's time to go short. Now it's just waiting for more information. And it may not do anything. There may not be any other clear buy or sell signal that manifests today. And that's fine, because you guys see in the Telegram that spend time with me what this system yields, you know, what my trading yields across many days. So is one losing day, is one small stop out, again, gonna break you as a trader? If it does, then again, you're probably doing something very incorrectly. But yeah, so here's the thing. You know, I was getting a question with regard to like the stop management. Like, you know, why would I want to close it here if we could still potentially go higher? I just want to get out of this trade. I don't want to be in the market that's trading like this. Why? Because it just drains your mental capital. I mean, you're sitting here watching, you know, the P&L fluctuate up and down, and it's emotionally draining for you. So what I want to do is I just want to get out, abort the trade at a very small loss, which again, you guys see a 2-handle stop loss on, you know, one contract. Looking at that compared to, you know, the numbers I've been putting up on the board from the trades I shared with you guys, I don't care about that. You know, I don't care about a small loss because I know I'm going to save that mental capital. And when that next opportunity presents itself, I'm going to be all over it. And that's exactly what professional trading looks like. Dragonis, that was amazing analysis and invalidation. Awesome. That's why you are profitable. My respect. Exactly. That's the profitable mindset right there. You know, if the person you're learning from or you hang out with in a community is not showing you how to take losses properly, how to take small stop losses, how to readjust, how to do all that, again, they're just selling you a pipe dream. Every single trader is taking stop losses and is getting stopped out. That's just the way it works. But how do you manage it? Am I going on tilt? Am I going to over leverage 10 contracts now because I'm pissed off at the market? You know, it's all those things you have to weigh out and consider. So that's how you do it. And again, if we consolidate here the rest of the day, I'm glad I'm not in it. And like I said, I'm just going to wait for the next obvious opportunity to set itself up. Awesome, Sharky. Glad that was helpful. Dragonis, that was amazing invalidation and respect. Yeah, definitely. You know, this is the real learning here. You know, seeing how you get an entry, how you manage a stop with logic, and then how you can invalidate a trade if it's not running for you. And again, this was less of an invalidation because again, all we're doing is just tapping into that order block and that 5-minute inefficiency. So nothing's changed structurally. Nothing's changed my point of view, but simply because it's consolidating, that's the market communicating to me to either one of two things, that I'm in too early or I'm offsides. So when I see that, I want to take that feedback and utilize it right away. So instead of taking a bigger loss, if we do come down into here, I've already invalidated it down here, but most importantly, valuable lesson today, preserving that mental capital. Daniel, how do you think price action would be tomorrow? I have not checked the economic calendar. Fly fish at NQ, close it out. Yeah, NQ is not doing what I'd want it to do either. So markets are fickle today. HS is ICT. Do you have an end date per year that you stop trading for the year? Yeah, it's a good question. So I kind of covered my tentative schedule moving forward, what it was that I was going to be doing when I'm taking off, when I'm going to be back. And it's very similar in a sense because basically what we do for the holidays, we don't like to trade that much. Thanksgiving, going into Christmas, New Year's, and the August months. So those are months I typically schedule in vacations, schedule things to do outside of trading, and that's what my schedule is going to look like. So tentatively, I'm going to be here with you guys until, what day was it that we were looking at yesterday, bro? I think we were looking at I think it was maybe November 14th, I believe. I was looking at the economic calendar and planning the rest of my couple months here. But as we start going into those Thanksgiving months, again, that's going to call it a year for me. And then I'll come back maybe December 3rd or 4th and into like around December 13th, 15th. There's a couple weeks there that there might be some decent price action. But outside of that, that's pretty much going to wrap up my year. And then again, you see here the market's dropping lower. But again, we've already been closed out here. So I'm not trying to wrestle the market. I'm not trying to impose my will. I'm not moving my stop loss lower. You just take a small loss. You know, like I told you guys, if your system doesn't allow you to weather 3, 4, 5, 6 losses in a row, you're way over leveraged and you're doing everything wrong. And very valuable lesson today as well, sharing how to make what would have been a bigger loss, a 5-point loss, would be turned into what I think it was about 2 handles, like less than 2 handles. So when I do take losers, you guys see they're tiny, but my winners, they run very nicely. And again, once you know how to do that, once you know how to have a model that you can trade, again, all you're doing is basic math. Eric, again, appreciate your enthusiasm on mentorship and training, my man. But those details will be out on the website here shortly. And then you guys will have all that information as to what it's going to look like, what I'll be covering. We have a curriculum uploaded, what I'm covering across each month. You know, the emphasis, again, all that will be there for sure. So you guys will have all those details when the website launches. Awesome, Eric. Glad that was helpful. Tomorrow, yeah. So tomorrow we have news at 8:30 in the morning. So yeah, I expect tomorrow to be nicer. I think we have the Fed chair talking tomorrow. I think it's at 2 tomorrow, I believe, maybe 2 o'clock. We have him speaking tomorrow, so we'll see how it goes. Uriel, my eyes burning watching this price action. Yeah, it's pretty bad. It's pretty bad. So looking at this here, looking at this fair value gap again, I am not interested in risk and capital. So this is just tape reading. So seeing how, again, we got below this here, I would expect this fair value gap here to serve as inversion. Looking at the 5-minute chart, looking at the range that we're trading in. We have the phantom trend line here. So that may be of interest to want to dig a little deeper into that. But again, I'm not interested in taking anything here, and do not take that as a trade. The market's already clearly communicated to us that it's not going to deliver how we want it to deliver. So it's important to have that in mind and understand how to navigate it, how to take those small losses and keep them small. You know, most of people's issues is one loss then spirals out of control into many other issues. So that's why you have to have very fixed rules. Again, we're short or we're long, so we're not like going to move the stop loss lower to not take a stop out. Stop outs are fine. It's part of trading. And it's how you take those stop losses that is going to define your success as a trader. So looking at the hourly candle. So the 2 o'clock hour candle did open, expand higher, but it was just a real nasty close. So what I was expecting, what I wanted to see, what the bias was trading lower into this discount, and then I wanted to see an expansion higher. But seeing how this traded higher, wicked, and rejected was very problematic. And then looking at the 15-minute chart here, you guys remember we were looking at this here. Remember I shared I wanted to see it really close above, because had we have done that, then that would have been clear indication that we're likely going to continue rallying. But right now, this is 50-50 to me. We're at equilibrium. And that's another reason why I wanted to see the market move away quickly, because at equilibrium, we want to see the market run away higher or lower, not chop around it. So there's a lot of things that communicate to me when the market's going to be low probability. And then once I identify that, I stop. I'm not looking to keep trading. I'm not going to keep pushing it to, prove to my audience I can find a trade, or not doing any of that. Again, you got to be a professional, and you got to be a good risk manager above all. Fly Fisher, let me go ahead and get to your question. The bigger OB. What time frame are you talking about? Oh, 15. Wait. Yeah, Fly Fisher, I'm not sure what order block you're talking about, my man. Cozy, new sub. Awesome. Glad to have you. Glad to have you. And again, that purple line is just the midnight open. So that's a key price level I want to have extended through the day to monitor. So again, if we're going to attack that phantom trend line, I shared how this would likely be an inversion fair value gap in here, hitting that. So as long as we remain below that, did we take out this low here? No, we have not. So we're likely going to run for that low here. So if it was another day, if I was aggressive, if I really wanted to push it today, I would likely reverse here and go short. But again, I'm not doing any of that. I'm not looking to trade this price action. And that's why they're just very squirrely, not respecting anything. Down close candle, our bullish order block, trades right through it. Inversion, trading right through it. So again, the algorithm's constantly communicating what it's doing. And a lot of times it's just telling you it's sloppy, it's not doing anything. So if you start to see the market not really respecting anything, then again, that's also a clear indication that it's not a high probability session to be taking risk in. Fly fish a 5-minute chart. 110 breaker block. Right here. Yeah, that's a valid point. So we could just be trading into there as well and go higher again. And just the nature of this price action is 50-50, which is why it's a market condition, again, that I'm not looking to trade. Like I would not put any more orders on this day unless something became very, very obvious to me. But, when trading, we're not here trying to put on a circus or do a magic show. Again, we're here running a business. We're taking calculated risk. And if we take those small losses, that's fine. You guys know we can find setups every other day, and small stop outs are nothing to concern yourself with. Cozy, do you know Tanya trades? I do not know. Matthew Davis, yeah, I would probably, for tomorrow's trading, I'll probably be there bright and early for that 8:30 news embargo lift, because typically when the news embargo is lifted, there'll be a nice setup around that time. And since we have Fed Chair speaking at 2, there's likely to be a consolidation build up into that. So I'm not going to want to be trading late in the morning, like after 11 or in the early PM session. Eduardo's good stuff as always. Awesome. Cozy, she's an ICT trader. That's awesome. That's awesome. Fly Fisher, the stream is exactly what I'm excited. Why I'm excited for your mentorship. Way too many ICT gurus don't exhibit the one thing Michael preached, and that's patience. Your approach is what I'm striving for. Appreciate that, Fly Fisher. And the real recognize the real, man. For those of you guys that again have been through the trenches in the marketplace, losing money left and right, you understand that it's not necessarily the concepts that are failing you. It's the proper mindset. It's understanding how to go about trading. Again, and that's why you have to spend time with a professional that's guiding you in the right way. We're not here hopped up on goofballs looking for that next adrenaline rush, over leveraging because I took a stop out. It's all about having that right mindset. And again, this is what gives you longevity as a trader. I really don't care about the next 2, 3, 5 trades. I'm looking at the next 100 trades on an Excel sheet in my mind, and I know what that's going to yield over the next 100, 200, 300 trades. The next 5, 10 trades, insignificant to me. And that's the mindset that you want to carry moving forward. And it removes the excitement, about a stop loss. Some people take one stop out and they're losing their mind. And that just, again, communicates you don't have it together and you need the proper mindset. Because if one stop out, again, is derailing you, there's definitely something wrong with your system, your risk management, or again, you're just not equipped mentally to be doing this. So, Matthew Davis, what do you do outside the business / charts? Pretty as of recent, the past few years, it's just been just straight grinding, business charts, studying and everything. But I enjoy reading, enjoy going to the beach here in Florida and playing basketball and spending time with the family. So that's what I do outside the charts. But as of recent, you guys know what it takes to learn this and the grind, and especially with the business aspect as well. It's been good. It's been eventful. It's been exciting. Working with my associates, training them, and because as a company also we manage our own prop capital. So working with them, training my other associates and stuff. So it's good. It's good. I do a lot of work in all those regards. Daniel, I'm in a Zoom class right now for university, but I have that on mute because this is the education I prefer. Daniel, that is hilarious, my man, because I was in the same boat you were. When I was in university, I would actually be in class, funny story, while we're watching this boring price action. I would be in class and I would have my wired earbuds because I don't use AirPods. I don't like to fry my brain. But I use the wired earbuds, and I would have it in my jacket, in my hoodie, in my ear, and I'd be looking this way the entire class, listening to gurus giving me signals while I was in university. So I can definitely resonate with the grind, Daniel. I've been there. Like I said, I learned this skill set, pick myself up by the bootstraps while I was in university doing all this. So I've been there. I've done that with you, Daniel. So I feel for you, brother. And the online Zoom classes, hitting that mute button hits different when you're listening to ICT or someone else. So I resonate with you, brother. I resonate with you, my man. Jimmy, how long you been studying ICT? You are well versed, bro. Appreciate that, Jimmy. Thanks, my man. And so ICT specifically for a year and 3 months now, but I did have an extensive trading education before and other things. That most of it was garbage, just being straight up with you guys again. All the books you bought, I spent hundreds of dollars on books, on PDF files, thousands of dollars on mentorship, all those things. And just to be taught indicators, support and resistance, breakout strategies, all the nonsense that, you guys have gone through as well. I understand, you guys went through everything that I had to as well as a trader. We don't come out here and, start printing right away. So, after going through all that, after, being fooled, after being indoctrinated by the systems that, they have in place to keep us uninformed as to what's going on. Once I was able to overcome all that, then that's when I really started getting into ICT, saying, wow, okay, there's actually a lot more to this. And I was introduced to it actually by some other, smart money concept gurus out there. And then I finally found the source and I was like, wow, there's really something here. And it's a life-changing skill set. So I'm going to go ahead and lock into it. And that's how I ended up here where I'm at. So Wordsy, Dylan, thank you. I'm out. See you, brother. See ya. Definitely much to learn today. And again, on these days here, I can look back on this at my younger self when I would have traded this, and this would have been a dusted account. This would have been me trying to go long. I would have got stopped out. Then I would look to go short. And because I'd be so over leveraged, just this retracement here would have stopped me out. And then I would have got upset, sold short again, got stopped out. Now I'd look to go long. It would have been a nightmare. And I would have dusted an account in probably under an hour here. But now I have the professionalism, I have the experience to know that, okay, this probably isn't going to do anything. Let me just take a small loss, keep it small, stay very significantly in the positive on the week, and just come back another day. Matthew Davis, 6 months into learning ICT. But again, that was because I already had extensive education on how the world worked, how these markets functioned, macroeconomics. I understood all those things going into ICT. So I already had a really good understanding of how things worked, and then ICT was just really seamless to integrate into my analysis. So I'll go ahead and take a few questions, look at a few markets, because this is nothing that I'm gonna trade or even call anything out, because again, it's not gonna do anything. EUGU more clean, definitely. HS classic high resistance liquidity run day. Exactly. And that's the thing about high resistance is if you want to be able to identify it and get out, not try to impose your will or find another setup. Like I said, I would have already, like I said, tried to sell short here, then chase it into these equal lows, and then it'd stop me out. Just be a nightmare. So again, this is why this price action here, I don't trade it. I don't like to give setups. If it was going to be clean, like I said, it would have traded lower and ran from here. Eric, what's your stop loss and profit? You strictly on ES or NQ? I trade them both interchangeably, but predominantly the E-mini S&P. Hello, Dylan. What's the difference between a breaker and a mitigation block? So the difference between a breaker and a mitigation is just one slight nuance, and that is that a breaker makes a lower low, whereas the mitigation block is associated with a failure swing where it does not make a lower low. A to the D, do you have kids? No, I do not. Sal, real recognize the real? Yes, sir. $315 macro incoming, yeah. All right, so let's see what we're looking at here. So 15-minute. Yeah, so very lackluster day here. So again, I still believe we have unfinished business above these equal highs here. But again, just because I have a draw does not equate to me taking a trade. Because what's to say now we're not going to whip down below the sell side, trade higher, or we could just rally from here. And because there's all that uncertainty, again, I'm not interested in taking any positions. Lisa Long, welcome to the community. Thank you very much for the support. Much appreciated. AM session expansion, PM session consolidation. Classic. Yes, sir. So seeing that we had also a lot of animation during lunch. But that's the thing about these conditions as well is, for the reason I'm trading very lightly, I'm not looking to push it a lot as well, is because look at ICT, for example. Why did he decide to leave early? Because with world events, with everything going on right now, that adds to the risk, number one, but also it makes it lower probability. So if we look at the hourly chart of, the previous, just this week, yes, there are clean runs. I've been traded that yesterday and then traded the PM session run up. And then there was a nice short today, but it's not really doing much. It's a lot of consolidation. It's a lot of low probability price action. And those are all things to consider, when you're looking to risk capital and looking to be a risk manager. So I'll go ahead and take a few questions. And then I think I'm going to go ahead and get going. David, my man. Yo, Dylan. Greetings from the People's Republic of California. David, my man. Glad to have you back in the saddle. Hope you're doing good, brother. Hope you had a good Vacation, my man. Slow day, weird week, great stuff. Yeah, Job, it's been really tough price action. Everything going on in the world right now, that's definitely impacting the marketplace. Large funds are not looking to position themselves in risk with everything going on, and that's definitely reflected in the marketplace. So what I'd be looking at for here now, we're in that 315 macro. So I'd like a run into these equal highs here and here. So that's what I'm favoring. We see a SMT here with the NQ. So looking at the NASDAQ, I'm going to go ahead and pull that up. So NASDAQ took out this low here, whereas ES did not. So this indicates that was a stop run, while E-mini S&P is under accumulation. So I would look at this down close candle, bullish order block. We hit that and then we rallied higher. So I would suspect that we're going to trade up into these highs now in this last hour market on close macro, which would be 315 to 345. So I'll go ahead and sit here with you guys, call a move that we're looking to manifest. Greetings from the People's Republic of China. Hello, hello. So this inefficiency here, any other day, any other time that I would be looking to trade that, I would be using that as a long entry to pair buying that inefficiency, and I would look to pair my exit with the buy stops right here. But why would I not look at this as a high probability setup? Again, we're chopping. We're in the macro, so I'm going to expect movement here, but also look at the range this offers. Just to that high, it doesn't even offer 3 handles. So again, I'm not looking to Mickey Mouse around in these markets and look to just pull down 3 handles. I'm looking for much bigger hauls in the marketplace. And again, 3 handles is not it. But again, just studying the run from after the SMT, the crack and correlation, bullish order block, hit that, rally. I'd want to see us rally from this fair value gap into those equal highs. So that's what I'm looking at here. But again, just like I said earlier today, with the conditions we're in, I welcome being wrong. Again, I'm not here to be right. I'm here to make money. So that's what we're looking at. So this is a prime example of a mitigation block. So we have a low, higher low, but it's also a failure swing. So this up close here, we would extend that through and expect support there. So we should not get through this, especially not these 2 down close candles. Yep, looking at NQ, still seeing the same thing. I'd want us to rally from this bullish order block in here. But again, nothing to incur risk on right now because of the conditions. So we'd have to stay above this order block here on a closing basis for me to trust this market going higher. Yeah, Matthew, that would be a propulsion block. Correct. So here's a bullish order block right here. Down close candle that trades into this bullish order block. So it's these 2 candles here. This would take the place of institutional support. So as it's hitting that here and here, if they're going to reprice it here, smart money is accumulating inside this down close candle, which is why I said that we shouldn't get below that. So just from this bullish order block to here, that would be the trade. And then let's say I was again looking to push it, I would go long this fair value gap and I would close out here. And then what is that? That's 3 handles. So what would that do? That would mitigate the loss I took here. So also teaching you how to mitigate a stop out as well, without over leveraging, without over risking, and not willing to lose a lot of money. That would be the trade that would mitigate my stop out. Yeah, Jimmy, I do. I do use fib projections. Absolutely. for targeting methods, it's something I absolutely use. Or for confirmation of a target, I will absolutely use fib projections in alignment with what I'm already looking for. Mr. X, we learned how to trade Forex on 1 minute time frame in your mentorship. Once you're done with private training with me for the full duration of the mentorship, you will be able to trade anything. If it prints candles, you'll be able to trade it. I will be teaching through E-mini, S&P, and NASDAQ. So I'll be teaching through indices. And yeah, once you know how to read price action, it's universal. So it's not just, okay, I know how to trade E-mini, S&P. I don't know how to trade everything else. You guys still see me calling the Forex market. We actually nailed crude oil to the wall today with that sell side target. So that was beautiful to see. So again, it applies to all asset classes: bonds, commodities, foreign currency, and then obviously the stock market itself. Matthew Davis, look at the question of breakers. Okay, I see your question, Matthew. Yeah. Daniel, do you hold overnight positions? Overnight position trading was something I used to do, but I don't anymore because of the climate, because of everything going on right now. I'm not willing to open myself up to that gap risk. And then again, gap risk is just the risk of from where we close to where we open the following day. Things can change so drastically in this climate right now, and I'm not willing to open myself up to that risk. So I'm doing very nimble intraday scalping. In long-term position accounts that I also manage as well, those I hold a different instrument. I don't trade futures itself. I trade it through the stock market. So that's a little more risk averse. So I don't have to really concern myself with, reading the news over the weekend. Man, what's going on this side of the world? Who's throwing bombs at who? I don't really have to worry about that there, because in those instances, I don't have that same level of gap risk here. So what I want to go ahead and do is observe the run into those equal highs here. So took a stop out in a low probability condition, and then I want to go ahead and teach on how you can mitigate that loss and then finish with a small profit. Because again, it's not always about making money. Sometimes you have to mitigate a stop loss, and there's a proper procedure and way to go about it. So what I'm looking at when I'm looking at intermarket analysis, I'm not sure what that's doing. Okay. Dollar, I like to see how dollar is falling right now, because seeing that the dollar is dropping, that gives me confidence that we're going to see that rally in the indices. So I'm constantly referring also to intermarket analysis on my different monitors as I'm trading real time. So I'd want to see this candle or the next one snap higher, get above this daily volume imbalance with the two blue lines, get above it, use it as support, and rally higher. Again, very poor price action here. So just understanding simple order flow. This down close candle should be supported. Down close candle here, support. Now I want to see this down close candle lend to support as well. So that's just simple, basic understanding of institutional order flow. Again, just very basic understanding there. So I want to see that persist if we're going to reprice above these highs. Matthew Davis, question about breakers. Can you talk about how to short into a breaker before we actually break it? Oh, okay. I see what your question is. Yeah. Okay, I'll just use this example here. So these last two up close candles, low, lower, low. It's just the market structure is just really sloppy. But it's really just having an understanding of where that market's going to go. And then once you know where it's going, you can just enter at any level as long as you're within that discount level. So let me just explain it here. It's not going to be the best example. If you do plan to learn from me, you'll learn how to do this extensively. So this is a bullish breaker here, right? The last two up close candles before the run on stops. So as we're trading above it, you guys classically know breakers as we get above it, use it as support, we can buy it. But what I'm doing is if I'm really bullish on a market, it may not come down and touch that breaker. So what I'm going to do is accumulate as it's trading through it. So as we're trading up here inside of it, if I'm on like a 15-second chart and like, let's say there's all right, that level's not shown here, but it's not important. Let's say this liquidity void here is inside that breaker. I don't even need to see it leave the breaker, come back down into it and use it as support. I'm just buying inside that level. If I'm really bullish on a particular market, again, it may not come back down and touch the breaker. It may just run higher. So I use that opportunity to reaccumulate there. So, and again, qualifying to you guys why these two down close candles should lend as support. Look at the bodies there respecting that settlement price, which is nice. And I told you guys in the next few candles, we'd have to start seeing her move through here. So I love that close right there. Beautiful. Let me show you why. From here to here, we closed above what? Midpoint. Closing above midpoint right there tells me what? This market is bullish. So then that's going to allow me to trust that we're going to run into this buy side here and here. So now I'd want to see this market get some legs and run higher. And then again, just teaching you how to mitigate. So stop loss here, no worries. We keep it a small loss, wait for that next obvious opportunity. Shared with you guys here, this would be a theoretical entry, again, not giving financial advice. And then you'd be able to mitigate the stop loss here and then turn around the day with a small profit above these highs here. Sharky, later, brother. Thank you so much, Dylan. All right, Matthew, I got to your question, brother. I got to your question. Let's take it easy. So yeah, really crummy price action. And then that's one of the more difficult things about trading high resistance liquidity runs is, again, I don't ever fear stop outs because I know my system. I know myself as a trader, as an analyst. There's no issue making it back. So looking at this here, low resistance liquidity high resistance liquidity conditions create more of a difficult environment to have to mitigate losses. So my goal as a trader is not to have losing weeks or days, more specifically weeks. I'm okay with taking a loss for a day and just coming back. But I don't want to have losing days, not because I'm afraid to take a loss, but because I have the skill set to where I can just mitigate it real quick and then be done for the day. But in high resistance conditions like this, it's much more difficult for me to mitigate those losses right away. And then it's more likely that I'm going to incur another one. So with all those factors, with all those things in mind, that's why I don't like to trade these levels here at all. Or trade these types of conditions. Again, I prefer to trade low resistance because, again, you have to deal with all this chop, deep retracements. Again, nothing's been invalidated. Nothing's changed what I'm looking for. Still, these highs have my attention. But looking at the condition we're trading in, it makes it really difficult. Makes it really difficult. Daniel, what led you to pursue a career in futures trading, particularly with indices? So I traded a little bit more Forex before, but now with everything going on around the world, I'm not entirely convinced that we're going to have a Forex market moving into the next few months to years. So I transitioned over to stock indices because they're very clean. They're very professional, highly liquid, well-traded markets for the most part. It's funny saying that in this delivery, right? But I like this market. I like this asset class to trade. Why this particular career? Because the freedom to, you know what? I made quite a bit of money this week with my trades. Let me just hop on a YouTube live stream. and just stuff like that. The freedom that this gives me, it's really cool. I really appreciate that. And it's big. It's big. I really enjoy that. I really prioritize and value, my freedom, being able to do what I want when I want, and all those things are really important to me. So trading lower here, clearing out the short-term low here and here. So if we're still going to trade higher, again, we should just snap higher here. But very, very ugly market condition. Wow, this is atrocious. I've been in some pretty bad conditions, but this is something else. J should have gone through those equal highs. Not a good delivery. Exactly. That's why I've had a lot of emphasis on why you want to pump the brakes on these days, why you don't want to keep entering, going short, going long, doing all types of things, because the market will just chew you up if that's the way you're trading. So again, like I told you guys, we took out these lows here. So if we are going to reprice higher, I'd want to see this market aggressively snap higher and reject these lows. So it can trade below the stops here and here, stop those traders out. But then again, it should aggressively reprice higher. Daniel, can you share your approach to managing emotions and psychological aspects while trading in volatile markets? Just spending time with me. Everything I'm sharing here is, how I manage my psychology, how I manage myself as a trader. All those things are aspects that I'm covering here. Because again, it's not just, all right, I'm a trader, it's time to print money. There's a lot of things you have to manage, a lot of things you have to consider. So, again, just spending time, with somebody that knows what they're talking about, and again, has the guidance to navigate. A to the D, I'm excited for 2024 because of you, Dylan. Can't wait for your mentorship and signal service. Awesome. A to the D, I'm looking forward to get rolling. I'm looking forward to getting rolling. Hey, Knight, may I know the approximate price for mentorship? Yeah, I know. I know you guys want to have that information. Like I said, I'll have it out to you guys by this week, next week at the latest, once our website launches. So you guys will have all that information, all the details will be there. And again, I wanted to have it about 2 months before I get started, so that I can start the enrollment process. You guys can start to get signed up, and we can get all that going. And then for those of you guys that need to get yourself prepared financially to, make a proper investment into your education, then, you guys can get that sorted out. But I'll have that information for you guys shortly. And I do really appreciate your guys' enthusiasm for it. I'm looking forward to it as well. But that information will be out shortly. I do appreciate your guys' patience. A to the D, Dylan, can you show how to set up copy trades in Tradeify? So I think I showed it. Yeah, I did show it in that video, how to become a funded trader on YouTube. But if not, there's several tutorials on YouTube that should show you how to set up copy trading. So I'm going to be right back, guys. I'm going to go use the restroom. And again, still just observing or run into these highs there, just showing how to mitigate that loss real quick. So still expecting that. I will be right back. One moment. All right. All right. See you, Daniel. Daniel, take care, brother. Glad to have you here. All right. So what are we looking at? All right. So 38 minutes into the hour. Still looking for a run above the highs. All right, so again, took out those stops, rejected them to the upside. So now we should see the market run through these highs here. So not the not the flashiest live stream here, but definitely value in here for those of you guys that have been trading long enough. Obviously, you guys can see that. So recap: stop loss, small loss. Showed you guys how to mitigate that risk and reduce it with logic, and then now here again teaching how to mitigate the loss without over leveraging, without revenge trading or getting back into the market pissed off or impulsively. Again, just going along fair value gap. Stop would be here, and then we're looking for about a 3-point run into these highs, and then through that, that's more than enough again to mitigate the small loss we took. So that's why it's important to keep those losers small, because then that will allow your losers to run. So there we just toasted those highs. So don't worry, guys. The algorithm did not take a day off. It did not take a day off. I did something wrong, and that's why it's important to accept that responsibility. You have to accept responsibility for your losses. So seeing this here, we have now mitigated the losing trade, and now we're into a small profit. So again, not flashy, not sexy, folks, but this is what you want to learn. You want to learn how to take small losses. And then again, I taught you guys here how to mitigate it. Was I here hopped up, excited, like, oh my God, this next trade, it better work, jumping on down like a disco rave festival? No, it's not a rave festival here. We are being professionals. I'm getting back in once it's one-sided, high probability, long here, covering here to mitigate the losing trade. Now I'll go ahead and show you guys the executions I did of how I took a stop and then how I mitigated that into today. So I'll go ahead and share those executions with you guys so you guys can see that. And again, if you guys are looking for the exciting experience trading, it's not here with me. I'm very boring. I'm very consistent, and that makes me good at. That's what makes me good at what I do. It's the mental space, how I'm trading, how I'm going about it, and again, those are all the important lessons. So on a 15-minute chart, again, we smoke these highs as we discussed, and then the next target would just be this premium fair value gap in here. So I'm going to go ahead and make this. Let's make it yellow. So I'll make that yellow. So let's drop down to our 1-minute chart in here. So this would be the next target right here. And then that's where I would be closing out of everything right there. Bam. So it's punching up into that. that's where I'm closing out. So we just hit that level there, equal highs, smoked, and then that's where I'm closing the rest of my position right here. So I'm going to go ahead and share something with you guys here. Let me go ahead and show you guys the executions. Huge lesson here. You guys take care. Stay safe. Wow, what a nice run higher. You know, and that's the thing with these concepts here. You know, if you guys are trading with other methodologies, other schools of thought, you know, it's, wow, you know, where did that run come from? You know, we're never surprised. We're never, you know, like, wow, you know, I really wish I would have saw that ahead of time. You know, we don't have that type of dialogue. Why? Because we know what we're looking for. So because I wasn't looking to be overly aggressive, I'm going to go ahead and share something with you guys here today of how I did this. So teaching you guys real time. So this is what real mentoring looks like. Again, it's not me just putting in you and winning trades and then we all get all, you know, excited off that. So let me go ahead here and share that with you guys. Going to go ahead and share the executions as well. All right, here we go. Just for disclosure's sake, this is a demo account. So we'll just say that so I'm protected. So again, here was the original stop loss. So pyramided here in that one and then, or added pyramided here in that 5-minute fair value gap. Told you guys if I moved the stop loss higher and then made it a small loss instead of a big loss here. Told you guys here, that fair value gap as it trades into it, that would be a long to do what? To mitigate a loss. So it was negative 300, now positive 125. Missed out on the run higher, but I don't care. I'm here to pay the trader. I'm here to get paid, and I'm here to mitigate my losses. I'm not here to, you know, put on a circus act for anybody and show out. You know, that's not what I'm here to do. I'm here to make money. I'm here to run my business. So to finish a crappy day like this, up 125, I'll take it. I'll take it. Because again, it's not always about making money. A lot of times it's about keeping what you have and not losing more than you're willing to. So I think that's going to go ahead and do it today. So very important lesson, mentorship level teaching with everything I'm sharing here. So appreciate you guys joining us here. I think I'll take a few questions. You guys want me to look at a few markets? It's Wednesday, so I'm going to give you guys a quick update on certain assets. So if you guys want me to take a look at some assets, let me know. AB, your style is really very refreshing. Glad to hear it. It's definitely a contrast from what you see promoted all over the internet. You know, you guys see the days I had before, for example, where I'm taking down trades that are 2-3 grand. And again, not saying that to, you know, flex or anything. I don't need to do that. I just share what I do on a very small scale. You guys don't see my personal accounts. You guys don't see other accounts I'm managing. I just show you guys very little. And I show it tastefully. One, it gives me a nice write-off for my business, being an influencer status. But the other thing is it shows you guys the reality. You know, I'm not here to show you guys home runs, grand slams. But if you do look at the executions and the trades I took the day before and the day before that, those are, you know, pretty respectable numbers. But on a day like today where it's difficult, I'm not looking to put up crazy numbers on the board. I'm happy to leave break even. Remember, if you leave these markets with your ass intact, that is a good day. That is a good day. Hey, Dylan, I made $220 following you the last hour. We'll pay for 8 ribeye steaks. Thank you, brother. David, you're hilarious, my man. The grass-fed or regular, David? What are we eating for ribeye, brother? Hey, but you enjoy your steaks, my man. You enjoy your steaks. I will be enjoying mine tonight. That's for sure. The song machines is mentorship one-on-one or group-based. I'll have 2 options. I will have those for that want more personalized attention, and then I will have a group mentorship for everybody. Colin, will mentorship be giving out homework? Mentorship will have everything. It's not going to be inundated with a lot of homework and assignments, but it will be a lot of you know, PDF files, reviews, all kinds of things. It's comprehensive. It's comprehensive. Like I said, it's not going to be your romper room Mickey Mouse mentorship. It's gonna have everything you need. Trust me. David, grass-fed, of course, my man. And ribeye too. So you already know what's up, my man. Got some class. Got some class too. Awesome. Joe, take a look at Tesla. I'll go ahead and do that for you. Wonderful stuff, but was on NQ. Denisha, appreciate you spending your time with us and sharing your knowledge as always. Off to finally eat something. Stay safe. Awesome. Thanks, Denisha. Glad you were able to join us. Take care. HS, I appreciate the value today as usual. Thank you, Dylan. Awesome. Glad it was helpful. And then that's why you guys can see, again, why when I take a stop loss, I'm not getting all excited. I'm not getting pissed off, getting right back into the market, you know, being frustrated. I know my model. I know what I've been doing for years, and I'm going to keep doing it. And I know that at the end of the week, at the end of the month, or at the end of the day, I'm going to finish profitable. So that's why it's important, again, to trust in your model, know what you're doing. If you're just out here playing cowboy, the market will wreck your ass. So you have to know what you're doing. You have to have an approach and a model. So let me go ahead and take a few questions. All right, let me take a look at gold. Let's take a look at gold. Yeah, so that's gonna complete my day. Like I said, went into the day slightly negative with that trade, but again, taught you guys how to mitigate losses. So when I tell you guys my goal is no losing days, again, that's something that took me a long time to get to. That's not something that you're gonna get there, you know, in 3 months or after a 2-week boot camp. That's just not how this works. You have to spend time with a professional. And then once you do that, then you can get to that point of, okay, well, I took a loss. Well, I'm just going to mitigate it. Early on, you don't want to do that. Early on, you just want to stop. You just want to stop the bleeding, because that's where most retail traders go wrong. They can't stop their own bleeding, and they'll just bleed out on one single idea on one single day. So once you get past that and you turn into a professional minded trader, you're not going to bleed out all your capital on one single idea. So again, just want to really impart that mindset onto you guys, and that's what's going to make you successful. I can teach you guys the best entry techniques, the best draw and liquidity. I can even put you in the trades. But if you don't have your head on straight in this business, it will take it clean off. Trust me. All right, so that is that there. I also covered to you guys real time. I'll go ahead and cover the markets for you guys. I didn't forget about you. Also covered you guys real time when we were in here, why this bearish breaker was not a short, and why this fair value gap here was not a short either. Why it would go right through it, just like it did. So I covered all those details to you guys here real time. And again, no fluff, no bullshit, straight to the point here, all business. So, all right, let me go and take a look at some markets for you guys. We're going to go ahead and get going and take a look at what dollar's doing, and we will get this sorted out. So let's look at gold. So USD. So Forex. All right, so gold is weak. That's what's putting a little bit of lift in dollar. But remember what we looked at this past weekend on Sunday? I believe I shared gold for you guys. So we had these equal highs here. That was our target on the upside. So we smoked that there. And then we were monitoring this fair value gap here. Extended that through. Remember I told you guys it was really interesting how we closed there on Friday, and how we traded there would be significant. So the fact that we did what? We got down below it. So if this thing was bullish, we would trade above it, use it as support and rally. The fact that we got down below it indicates what? This is probably going to be inversion. So we get above it, and then look at what the bodies tell us. This is gold. This is a widely traded commodity. And again, nothing is random. This is all algorithmic. It's not doing harmonics. It's not doing indicators. None of that is applied here. That's algorithmic confirmation. Boom. Doesn't get above it. Again, wicks can do the damage, color outside the lines, but the true narrative is told by the bodies. And then what do we see? Sell off for what? Stops here and here. So anyone that was long that did not take partials here or here and close out the trade in a premium, they're now getting raked across the coals because they don't know how to trade. So stops here and here, market was gunning for those. So as of right now, gold's not that clear to me, just because, again, it's such a event-driven market. It can just pop off at the drop of a hat with everything going on right now. But this fair value gap, again, would have been a good target, but that was the same daily swing lows just on a weekly chart. So what I'll be monitoring for gold is how we trade in this inefficiency. From what I'm seeing right now, these equal highs, we have unfinished business above there, but here's the caveat to that. We may need to drop lower before we take that out. Again, I told you guys already through several different discussions what would have me looking at gold. I told you guys we're going to see a parabolic run higher in gold once the BRICS nations make their currency backed by gold, and that's going to be a threat to the dollar. And then once that happens, then gold is going to be allowed to rise parabolically. Until then, gold is one of the most highly manipulated assets. It is trading way under valuation, and it should be up near 25,000. But because we have a rigged market, because it's a controlled market, it's being held here. What's occurring in this huge range? Accumulation. Who's accumulating gold at these cheap prices? Smart money, central banks. Just read, pick up, not the news, because that's just going to misinform you. But look at what these central banks are doing. They put it in print. They're not hiding it from you. They're accumulating gold and metals at astonishing rates. Why? They're buying this discount because once it goes parabolic, it's not going to stop. and it's going to go up to fair value, which is 25K in my humble opinion. Again, not financial advice. But again, in the meantime, you have to trade the fakery. This is not a real market. We don't have real markets. We never have. So you have to trade the fakery. Logically, looking at this market, gold should be a lot higher. Logically, looking at the stock market, we are trading at multiples that are ridiculous. But it's a fake market. So you have to trade the fakery. You can't just look at this market and say, well, it should be repriced higher. So I'm just going to buy it and expect it to go higher. That's not how this works. This is a rigged market that's designed to take uninformed traders' money. Once you look at it like that, everything just falls into place perfectly. So there's gold, and then there's my little the rant on the controlled markets and why you can't look at this like real markets and look at forward guidance, PE ratios, all that stuff's out the window. None of that stuff applies to these markets. I'm buying S&P. I was long today twice. Made money, but I don't think stock should be there. Does that mean I'm going to sell short and impose my will? No. If you do that, you're just going to get slaughtered by these markets. That's what they're designed to do. Dragonis rigged to the tick. Exactly. Dylan, will mentorship allow for students to unmute and speak? There will be parts where I do have Q&A, but if you do, again, want that closer relationship with me as your mentor for that duration of the mentorship, there will be private options available where it'll be small group with just 2, 3, 4, 5 people, not over 5, but probably around 4. And then that's where, if you want that level of mentorship, then obviously you'll be able to have that as well. But they're going to integrate seamlessly. But again, I'm not going to take the thunder away from the website where all that information will be there. So you guys will have all that, and you guys will be able to explore the different options. Knight, thanks for today. Hope to see you live tomorrow as well. Again, we'll see. We'll see what the market structure is looking like. Days like today, again, it's very boring to live stream. Again, I probably bored the socks off you guys with all that. But again, it is valuable stuff for them. So for those of you guys that are actually here to learn, you guys were able to see the value in that. So I was asked to look at euro, but instead of looking at euro, I'm just going to go and take a look at the dollar because it's basically the same thing. So yeah, so dollar is being extremely fickle right now. It's not delivering cleanly. So remember what we discussed on Sunday. So let me go ahead and just put that on the large screen. All right, I don't know what that's doing there. So remember what I told you guys about dollar. That's why I was asking for the Forex traders to sound off. Our analysis has been banking. I was wondering where all you guys were at. None of the Forex traders were making noise in the Telegram this week. So except Supernova, I see you, and I see you doing your work. So keep that up. But remember what I told you guys going into this week. We have this down close candle bullish order block, which also aligns with what? Looking at that daily chart, we have this wick here from this candle. This candle's open to the low. So that is consequent encroachment here at the daily wick. That's that dotted line. The dashed line is that monthly fair value gap, all the way back up to that monthly chart. That's this inefficiency here. And remember what I told you guys, if we're going to see rally on dollar, we would do so from what levels? These levels right here. So now going all the way down to that 4-hour chart, what I shared with you guys on Sunday was that if we get down to this bullish order block and we find support, we're going to rally into this daily fair value gap. Boom, targets hit. I said if we get below this bearish order block here, we're going to clean out these equal lows, and then how we trade there, I'm going to have to see and wait for more of that information. So it's not a matter of me calling both sides and, look how smart I am. It's a matter of me qualifying what I'm looking for. If the market does this, then it does that. If it does this, then it's going to do that. Yes, yes. Smash GBP and Euro, sir. Awesome. Glad to hear that. Glad to hear that. But again, we did not see that. What did we see? The market traded down into that bullish order block opening price, down into the consequent encroachment of the daily wick and the consequent encroachment of that monthly fair value gap. So look at the bodies here, respecting the consequent encroachment of that daily wick. That's algorithmic. Those wicks there, that's accumulation, and that tells me that smart money is accumulating there to send it higher because the bodies are unwilling to get below it. So once we displace higher, shift the market structure here, create a fair value gap, that's a long or a short in euro pound. And then we trade higher for what level? Is it a random zone that we had no idea of before? Yes, we had all these levels on our chart before the market even started printing candles this week. We had this daily fair value gap, which is that purple rectangle. So what's the targets? Well, we have the low end. That's a nice partial. We have consequent encroachment. We have the upper quadrant, and then we have the high end, which we smashed into today. So more than enough range to pay the trader in the foreign exchange market. So that's what I was looking at this week. What is not favorable for higher prices is this right here. What I wanted to see, what I told you guys we should see if we were going to be bullish, was close above the daily fair value gap. Close above it and trade to and through this breaker. I wouldn't want to see this be a breaker in the traditional sense where we reject and go lower. Because if we do that, then that indicates we may need to continue trading lower into these equal lows and clear that out. If we were going to remain bullish, we would do what? We would close above it, use it as support, and rally higher for this buy side. But because the bodies are respecting that, that's not bullish. So I'm having to wait for more information and demand that the market show me what it wants to do. And again, that's part of trading, but these are the specific signatures that I'm looking at. So seeing this here pumps the brakes, on bullish dollar and just has me waiting for more information, which is not a bad place to be. What are my opinions on Tesla? Let's go ahead and take a look at Tesla. I think we smoked our Tesla targets last time we took a look at it. So that's what I was looking at on dollar. That's what we were looking at this weekend on Sunday, and then how that materialized. So let's go and take a look at Tesla. Yep, so Tesla smacked into that weekly volume imbalance we were looking for. So we were up here. I called Tesla lower to the sell side here, and then I said animation through that takes us into what? This volume imbalance in here. So we repriced that, and now we've pulled back into the inefficiency. So Tesla depends a lot on stock indices. So because I'm neutral on stocks. I'm neutral on stock indices. I'm neutral on the stock market. That's why it's a scalper's market. So when I say it's a scalper's market, what does that mean? Just like I'm doing today. I'm looking for surgical strikes in and out, and that way I can generate income forever. There's always new bread and butter in the stock market once you know what it is that I'm able to teach and that I'm using myself. So there's always new setups. There's always bread and butter. The only thing that I like to look at is longer term. I like to see where we're going on that monthly and weekly chart, and then obviously that daily chart, because it gives me more clarity as to, okay, well now I can hold for, 20, 30, 40, 50 handle runs in the S&P when all those things align. But because I don't have that clarity, I'm resorting to scalping. In and out, surgical strikes, intraday. So again, like I said, once you know how to do this, there's always fresh bread in the marketplace. But in terms of the longer term outlook, longer term projections, I just don't have that clarity right now. All this uncertainty going on in the world, again, if anything pops off in the Middle East with war, dollar's going through the moon. So if dollar goes to the moon, what does that mean for stock indices? So there's just so much to have to weigh out, consider, and look at. So again, with that long dialogue out of the way, just wanted to share why I don't have as much clarity as I usually do. And again, I like to give you guys value. Again, I have a standard. I'm not just trying to leave you guys ill-equipped without enough information. So with all that in mind, we have this weekly inefficiency here. If we're going to remain bearish, I prefer to see us stay in the lower half of that, reject, sell off, and then run for this inefficiency here in this low. If for some reason we do see stock indices continue rallying and we get through this weekly fair value gap and close above it, that's the key, close above it, then my attention is going to go to the buy side here and here. But again, I'm still favoring lower prices on Tesla based off everything we're seeing. And then I'm doing extensive research on what's going on different parts of the world. And from what I'm seeing, these markets are just waiting for the next shoe to drop. Taiwan, China invasion, Iran encroaching on Israel, all those things have already been openly spoken about, that the United States military will get involved if that happens. So all those things are critical to factor in and think about in your trading. All right, guys. So I think I'm going to go ahead and wrap it up here. Getting hungry, and I'm satisfied with what I was able to teach you guys today. So let me go ahead. Flyfisha, one more member question. Is Fair Value God from X one of your compatriots on this mentorship venture? No, sir. No, sir. I am not affiliated with Fair Value God. No, I'm not. Jonathan, when you say close above it, you mean daily close or weekly? Either one, but daily is the one I'd be looking for. I wouldn't want to see us close above that on a daily chart. Amy Moore, question. If we are in a market maker buy model trend, what would you consider to be the targets for ES and NQ? Would they be the buy side liquidity, previous month's high? Yeah, Amy. Nothing has changed since Sunday. I'm still looking at... let me take all this drawing off. There's just way too much on that chart. my target's still above here, which is why I wasn't looking for shorts from this discount today, and why I had my attention higher, because on the daily chart, I'm expecting us to run here. So I want to put most of my gunpowder behind where that daily, weekly chart is expanding. So on that weekly chart, if I'm expecting it to expand here, can I take shorts and make money? Yes, I proved that on Monday, and then I gave you guys a PhD level analysis as to why we did it. But I don't want to be trading short. I want to prioritize trading in line with that institutional order flow. So I want to do what? I want to be buying this market, because institutional order flow on that daily, weekly chart is telling me we're going higher. So I want to put most of my gunpowder, I want to place most of my heavy-handed bets behind what? That daily, weekly order flow. So that's the draw on liquidity. That remains the same. Not calling anything higher above that, because I need to see how we trade there. How and when we trade there will be significant moving forward. J.I. Fish, thanks, Dylan. Awesome session. Glad it was helpful to you, brother. So I believe I covered all the member questions. If I did not, please pardon me. But I think I'm going to go ahead and get going. So appreciate you guys joining us here. Appreciate the support. And again, please hit that like button on your way out, as it is greatly helpful. So with that, I hope you guys have a great rest of your day, good rest of your week trading. I may look to do one more live stream this week. We'll have to see what we're looking at in terms of price action. But I want to come on here with a cleaner day with you guys. So maybe we'll do a morning session live stream. Ooh. So we'll see. Thanks for joining us, guys. Hope you learned something. And if you did, be sure to leave a comment and give us a like. Helps us out greatly. So with that, hope you guys have a great rest of your day. Take care, good luck, and good trading.